Sensex and Nifty hit a record high after 14 months. Both markets give up most of the gains to end barely in the green. Bank stocks lead the rally.
Whirlpool of India stock declines in trade after its promoter sells nearly 11% equity after upsizing the offer from the initially indicated 7.5%. The sale results in the Indian arm ceasing to be a subsidiary as the parent stake slips to near 40%.
In a likely resolution of a long-pending issue, Tata Power is likely to ink a supplementary power purchase agreement with the Gujarat government for its Mundra unit and restart operations in December. This pact is likely to be used to ink PPAs with other states as well. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vivek Iyer and with me is my colleague Sonal Bhutra. Well, good afternoon, Sonal. What a volatile trading session we saw today. We hit the intraday fresh all-time highs, post which we gave up a lot of those gains before making a smidge of recovery towards the day's highest point.
Yes, so Sensex crossed that 86,000 mark. Nifty was above the 26,300 mark for the first time, but we have come off from those highs and absolutely flat on the Nifty. Mid-cap index too gained 51 points today, but you know, the advanced decline ratio, that is something that we will keep an eye out on because today it was largely in favor of declines after for a bigger part of the day being in favor of advances as well. Most of the sectoral indices, they were in the red today, but we did have some gains coming in from Nifty Media, financials, banking index did well, and the IT pack as well. But you know, a lot to talk about the market moves and individual names on the show today. So here's everything we have lined up for you on the show today. As always, we take you through the top movers and shakers of the day. Today it will be with Sudarshan Kumar. We decode the Nifty's all-time high, tell you why car trade slipped in trade. Also, we will put the spotlight on Glenmark Pharma and take stock of the big promoter stake sale in Whirlpool of India. And last but not the least, we delve into the key market events to watch out for in tomorrow's trading session. But, you know, of course, the big talking point, it has to be the 14 months time that Nifty has taken to hit new highs. We have Hormuz Patakia with us to decode the rally, the constituents and the contributors as well. Hormuz.
It finally happened, didn't it? And 14 months is what it took. 27th of September of 24 was last time when the Nifty was at these levels, and we finally managed to cross that. But the bigger talking point is that from the lows that we made in 2025, which was in April this year, the index is up 19%, yet we remain underperformers compared to the rest of the globe. You talk about contributors, the usual suspects of Bharat Electronics, Bajaj Finance, SBI, but Eicher Motors is the top gainer here, gains of anywhere between 25 to 45%, but the losers are the bigger here. Trent, street darling at one point of time, has almost halved. Bajaj Auto, Coal India, TCS, NTPC, all of them down anywhere between 25 to 30% in the last 14 months. But if you take a look at the gainers from the April lows, you see BEL is up almost 50%, but the post-GST rally seen in M&M is the talking point here. Eternal has done well, as has Jio Financial Services. But if the Nifty made record highs, the broader markets is where the pain lies. The mid-cap index has done precious little over the last 14 months. The small-cap index is down 7%. And more than the gainers, you look at the losers here. You look at the mid-cap losers, Colgate is down 42%, as is IndusInd Bank, no longer a part of the Nifty. Tata Tech, another hyped IPO, down 40%. RVLN and Ireda, the high-flying PSU stocks of 2023 and a better part of 24 as well, down 40% each. The picture in the small-cap space is even more grim. Ola Electric is down 60%, as is Tejas Networks. You look at Jindal Saw, add another 11% to Whirlpool's 46% drop. So overall, the Nifty may have made a record high, but it is the broader markets where the actual underperformance and the actual pain lies.
Well, thank you so much, Hormuz, for joining us and giving us all of the details. You know, although, like you mentioned, that the Nifty has hit all-time high after 14 months, the rally has been extremely narrow. But moving on, remain overweight on India. That's the word coming in from Jonathan Garner of Morgan Stanley. He adds that he's bullish on financials and the consumer discretionary space.
Market starting to react to this with the idea that the policy stimulus that we've had in India is going to drive quite a meaningful upswing in nominal GDP growth, and earnings growth should accelerate from something like 7%, 8% to mid-teens next year. There is foreign investment participation in India on an ongoing and daily basis, and India's had a very vibrant IPO and secondary market. And it's a much wider range of investors that participate in the market than did in the past. So I wouldn't actually characterize it as being the case that foreigners have sort of been leaving the Indian market, or that something caused them to move out of this market in a major way this year. Going into next year, we are recommending quite tight market risk positions. So we do have an overweight India, but it's relatively small, and most of our other market calls are relatively contained. Overweight financials, consumer discretionaries, industrials. Those are actually calls that we're making generally across Asia. For example, if you were to look inside the Japanese market, we have much the same calls. We're underweight energy, materials, utilities, and healthcare in the Indian market. And so there are some quite pronounced sector relative calls there. I think for the energy sector generally, obviously it's more downstream in India than upstream, but it's a sector that is struggling as we go through an energy transition. And in the materials sector, we also have sort of a broad negative call on that outside of some very specialized areas like rare earths or gold miners and things of that nature. That's not very easy to access those kinds of names in the Indian market. You can find them in places like Australia, for example.
All right, that's the word coming in from Jonathan Garner, but we also spoke to a whole host of other market experts. Here's how they view the Indian markets from here on.
Especially when we are coming out of a reasonably decent underperformance relative to many global markets around the world as well as emerging markets. And I think we've got, of course, some of the macro starting to look a little better, especially given that environment for a further rate cut both globally as well as in India is starting to look relatively more brighter. And I think alongside which, last but not the least and most important, is that we've got some earnings acceleration as well in this quarter compared to what we've been witnessing over the last few quarters.
If you look at Nifty, which is almost at record highs, but if you look at the median constituent of Nifty, it's down by about 8%. Similarly, if you look at the small cap index, it's about 8% away from its all-time high. But the median constituent of small cap index is on an average down by 21%. And if you look at the BSE 500, the median constituent is down by about 18%. So very few handful stocks have taken the index higher, but the breadth of the market has been extremely narrow and poor. And we have seen this in the previous cycles also, that sometimes the index is driven by few names and few stocks, but the breadth has been extremely poor. Now, what can change this? I think finally stocks are slave of earnings and flows. And when we look at earnings this quarter, I think it was a little better than expected. After many quarters, we saw an upgrade cycle rather than a downgrade cycle on an aggregate basis.
Well, that was the word coming from Pankaj Sibirwal, hoping for better earnings growth going forward. But moving on, Sudarshan Kumar now joins in with the top movers and shakers of the day. Sudarshan, over to you.
So amid big volatility in the market, we have seen some of the top movers. We'll start with the auto pack, and these companies will be reporting auto sales for the month of November on December 1, that is Monday. But we've seen a big move. Look at the Eicher Motors. The stock was higher for the last few days, but today it was top Nifty loser, down 3%. But on the other hand, in the two-wheeler pack, Hero MotoCorp was largely flat, up almost 0.2%. Amongst PV makers, Maruti Suzuki has seen a sharp fall, down almost 2%. But come to CV space, both Ashok Leyland and Tata Motors commercial vehicles were up somewhere in the range of 6 to 7%. The reason of two-wheeler stocks largely falling because Vahan registration data is indicating a mixed trend. While it's negative for companies like Bajaj Auto and Eicher Motors, but it's looking positive for Hero MotoCorp. In the CV space, trend has improved over the last few months, even for the month of November. For example, Ashok Leyland sales Vahan registration from November 1 to November 27, 2025 is already higher than the sales that company had reported for November 2024. On the back of that, these companies were in focus. EMS companies were under pressure after a big move that these companies saw yesterday. All the three names, Keynes Technology, PG Electroplast, Amma Enterprises, were down somewhere in the range of 3 to 4%. Might be mainly because of demand concerns. Normally, demand is low in the winter. Now, today was Sensex monthly expiry. On the back of that, BSE stock was in focus. At the end, it was up almost 1.5%. Normally, on expiry day, turnover is higher. That's the reason you have seen a move in BSE. PV Fintech, if you remember, Jefferies had come out with a note. PV Fintech had attended that conference. In that, company has said that GST changes do not have major impact on the company, and the volumes have seen a sharp increase over the last few months, or say mainly after GST changes. Car trade. Today, the stock was down. At one point, it was down as much as 8%, but it closed with a cut of almost 4%. If you remember, on 10th of November, we had reported that car trade is looking to acquire Car Deco and Bike Deco. And 11th of November, company had confirmed that news. But today, early morning, company had disclosed to exchanges that those stocks haven't called off. And that's the reason we have seen a downtick of almost 4%. Lastly, Ganesh Housing was in focus. The stock was up almost 5 to 6%. I think this is the wrong stock that we have tagged. So at one point, the stock was higher 8 to 9%. So the news is that 2030 Commonwealth Games, Ahmedabad is going to host that, and company has a huge land parcel there. That's the reason it was up almost 5 to 6% at the close.
Okay, all right. Thank you so much. Some interesting stocks on our radar today that moved across market caps. Let's move on. The US drug regulator has given Glenmark Pharma's Monroe facility an Establishment Inspection Report, or the EIR. The stock gained in trade. Ekta Batra is here with more details. Ekta, how crucial is this facility for the company?
Well, yes, Glenmark is in focus because they have received an EIR, or an Establishment Inspection Report, with a voluntary action indicated status, which is a positive status for their Monroe facility, which is located in the US. Now, why is this important is that basically it clears the facility, which has been under a warning letter since June of 2023. It was recently inspected in June 2025, was issued 5 observations. The US FDA seemed to be satisfied with the reply on the observations and the remediation, and hence have issued an EIR with a VAI status, which means that they have got the green signal for that facility to start commercial operations. And that is exactly what the company plans to do. They have said that they will be looking at commercial manufacturing from the plant. Now, the plant is expected to become more significant in terms of a contributor now that the regulatory issues have cleaned up. In fact, we had Glenmark invest over around $50 million in the facility as well. Now, remember that Glenmark also has had many other regulatory issues that it has been dealing with. For example, their Baddi facility was under an import alert since October 2022. Their Goa facility was issued a warning letter, and their Indore facility as well.
Well, thank you so much, Ekta, for joining in and giving us all of those details as far as the stock as well as the news regarding Glenmark Pharma is concerned. But it's a good time to welcome our guest, Amrish Malika, who's an independent market expert, and Ruchit Jain of Motilal Oswal Financial Services. Good afternoon, gentlemen, and thank you so much for joining us. Amrish, let me come across to you first. You heard Ekta speak about Glenmark Pharma after the very significant deal that the company had with AbbVie. Q2 was a bit of a washout given the kind of multiple one-offs that the company reported. Do you feel the worst is now behind that, and especially with the regulator radar also now getting cleared up?
Yes, I mean, it seems the worst is behind, because if you remember, this warning letter was received in June 2023. And after that, that major overhang was there. Now with this clearance coming in, I think it's a big positive for Glenmark. So, I mean, like the stock can, in fact, move up decently well from here. So I really don't see much of a downside, and still, I think it could be a good time to still buy.
Okay, still a good time to buy. From a chart perspective, Ruchit, how is the stock looking?
Yeah, hi, very good afternoon. Well, we have already seen a price-wise correction over the last few months. The stock made a high of around 2280 in the month of July, and post that, the stock went through some price-wise as well as time-wise correction. And the good thing is that recently, over the last 15 days, the stock has consolidated above its 200-day EMA only. Means in this entire price-wise corrective phase, the stock has not broken its 200 EMA, which is the long-term support. So that is placed somewhere in the range of 1750 to 1800. So the risk-reward ratio seems favorable post the recent correction to take some counter trades over here. So keeping a stop loss below 1750, which is this 200 EMA, one can definitely create fresh longs on Glenmark at current levels.
Well, thank you so much, Ruchit, for your view as far as Glenmark Pharma is concerned. But another stock that was in focus today, and that was a CNBC-TV18 exclusive, was Tata Power. Remember, earlier today we reported that Tata Power's Mundra Ultra Mega Power project having a capacity of almost 4 gigawatt, is all set to resume operations in December 2025. In fact, we understand from our sources that the company has now reached an in-principle agreement with the Gujarat state government for a supplementary PPA. So this will now supersede both Section 11 as well as the earlier PPA, which both Tata Power as well as the Gujarat state government had actually given up on. This is a material development as far as Tata Power is concerned, given the fact that since July of this particular year, the plant has not been operational as Section 11 was not extended on account of low power demand due to the extended monsoon season. Now, we reached out to the management of Tata Power. They are yet to respond to our queries. And just to give a sense of how important this particular facility is, in FY25, the company reports this particular plant as part of a cluster of Mundra, coal as well as shipping. They actually reported a PAT of a little over 1,070 crore. In Q2 FY26, when the plant was not operational, the same cluster actually reported a loss of 362 crore, and the company squarely put that weak performance to the fact that the Mundra facility was not operating. When you're talking about this particular development, how important do you think this is, Ambrish? We are hoping, that this particular development does fructify at the start of December. Would you relook at Tata Power from current levels as well?
Absolutely, because this has been an issue for Tata Power for a very long time. And with this fresh PPA, I suppose those issues will be behind them. And again, Tata Power, because of this, hasn't really performed too well in the past couple of quarters. So you should see levels of about 440, 450 for Tata Power soon.
Okay. What about you, Ruchit? How does it look from a technical perspective?
Last 11 months, the stock has been in a consolidation phase, and irrespective of the market up move, we have not seen any kind of trended phase coming in. So 370 to 415 is the range where this entire consolidation has happened since last year's December month. So until we see a breakout above that 415, we believe that in the short term, at least the stock would continue its sideways move. So the follow-up move would be very important. Yesterday, we did see an up move. Today morning, the stock opened on a positive note, but we can see that there is no follow-up buying happening. So from a fresh investment perspective, I think if we get a breakout above 415, 420 going ahead, then we should expect a trended move.
Thanks for that, Richard. Another stock that was in focus was Whirlpool India. The stock was one of the stark underperformers in the session today. This was after the promoter entity, the parent, sold nearly 11% equity. Hormal joins in with more details as to what exactly this means as far as Whirlpool India arm is concerned.
The overhang is not yet over, and 11.5% equity sold today by the promoters in that block deal. The stock also ended 11.5% lower. The initial plan was to sell 7.5%. Then the deal was upsized. The shares changed hands at around 1,041. 1,600 crore rupee was the size. Now with this, the promoter shareholding, which stands at 51%, has now come down to around 39.5%, 40%. Now the street had a bit of a whiff of this because the stock was down around 14% in the last 1 month. But Whirlpool Corp, the parent company, in their Q3 presentation late last month had mentioned that they would be doing this stake sale sometime towards the end of the year, and that $700 million debt repayment has been delayed. Now that should happen in 2026, and that the fact that the 20 plan to bring the stake down to 20%, which they announced earlier this year, will now be done by the first half of 2026. Now, if you take a look at the stock, when the deal first happened in 2024, from there until October of 2024, the stock was up 90%. But from those highs, the stock has corrected nearly 60%. Now, the overhang here is that there is still a chance that promoters would sell further because they still have 40% stake. They plan to bring it down to 20%. So there is more supply that is anticipated in the next 6 to 7 months. On a valuation standpoint, of course, Whirlpool, after the correction, trades at around 26.5 times FY27 PE, which is around about the same level as some of its peers, but cheaper than stocks like Voltas, which trades at around 44 times, and Blue Star, which trades at around 47 times. Now, when you take a look at the shareholding as well, Before the stake sale, the promoters had around 21%, 51%. Mutual funds and FPIs had loaded up on the stock. The retail shareholding has remained largely constant at around 7.5%. You take a look at the street view as well. ICICI Securities believes that the recent agreements would lead to brand extension but will impact margins going forward. Kotak Institutional Equities also sees an EBITDA hit from around 65 crore to 70 crore for Whirlpool going forward. Yet the street remains optimistic of around about 8 analysts out of the 13 having a buy recommendation on the stock. But today the big accident indeed was Whirlpool. The overhang is yet to get over because more supply is anticipated in the upcoming months.
Okay, all right. Thank you so much for explaining that. That was a big mover in trade today. Amrish, as Hormus pointed out, there could be a further supply that could come to the market, another 20% stake. You think that will continue to be an overhang for the stock?
Absolutely. Because when they had first announced about this sale, I think way back in March 2025, the stock had cracked to levels of closer to 900. And post that, we saw a decent rally with an expectation that it would be sold to a strategic buyer or an investor. But then the way they are selling right now at a discount, and I suppose they have another 20% more to go because they will finally hold 20%, and currently they have about 39-40%. So the balance 20% will come to the market sometime sooner than later. And that again is expected to happen at a discount. So I'll not be surprised if we see levels of closer to a 950 or maybe even lower. Keeping aside the fundamentals, keeping aside the P, which is decent, but then this overhang is surely going to keep pressure on the stock. So I think we'll see, like I said, prices of closer to about 900 sooner than later.
That's right, Amrish. And like the management of the parent entity themselves said, they're actually looking at the valuation arbitrage and looking to exit or divest their Indian subsidiary. Well, thank you so much, Amrish, as well as Richard, for joining in and giving us your views both on individual stocks as well as on the market. With that, it's time for a short break. We'll get you the top corporate voices along with the key market events to watch out for on the other side.
Welcome back. You're still tuned into Markets Forward, and it's time to talk about the big corporate voices of the day. The MD of Prestige Estates told CNBC-TV18 that the base for listed real estate developers has grown significantly, and hence he expects Prestige to deliver 10 to 12% CAGR in terms of pre-sales over the next few years, and it will be driven more by volumes than pricing. On the new labour codes, he said labour costs could rise by 10 to 15% once implemented.
In a CNBC-TV18 exclusive, Axis Bank's MD and CEO Amitabh Chaudhary said that the bank's loan growth continues to outpace the industry, with November trends remaining healthy. He noted that the Insurance Amendment Act has been long expected, and the bank is keen to merge Axis Max Insurance with Max Financial, while also raising its stake in Max Life. Chaudhary added that while the bank remains watchful on the MSME loans, there is no cause for concern at this stage.
And before we wrap, we bring you some key market events to watch out for. Vinny Motiwala is standing by the big wall with the key events to focus for tomorrow. Vinny.
Hi, so first let's start with the global events that we have. In Eurozone, we'll watch out for the CPI data, expectation data that will come in, so keep an eye out on that. We have the Tokyo CPI. So Japan is something that we'll be keeping an eye out on in terms of market, unemployment data there, industrial production, as well as retail sales. So we'll see some action on the Japanese front. Domestic market, let's shift to that. India, we'll watch out for the industrial production data as well as the GDP data. That will be key to watch out for. Earnings, we have Advent Hotels International that is reporting their numbers tomorrow. So that is something that should be on your radar in terms of a stock. And corporate action coming from Thyrocare, they'll be trading X of bonus, which is in the ratio of 2:1. We have Autumn Investment, which the board will be mulling for a bonus issue. Patel Engineering, the board also will be meeting tomorrow and mulling the idea about right issue. So that is something that you should keep on your radar. IPO watch list, let's watch out for the listing of Sudeep Pharma. That is there. And in other news flow and other events that we're keeping an eye out on, important update, IEX as well as CERC, the case that had been going on. Now, the Electricity Appellate Tribunal will be hearing that case, which IEX had fined because there was a plea that was challenging CERC's decision. So that case hearing is tomorrow.
Well, thank you so much, Vinny. That's an extremely important case to keep an eye out for, and the share price and the shares of IX will remain in focus on the back of that. With that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.